I think the reason this episode continues to resonate is because it addresses a pain point that every landlord feels, that sense of being overwhelmed and disorganized. Standard operating procedures are the antidote. They bring order to chaos. They help you feel in control instead of reactive. Even if you only own one property, creating standard operating procedures is worth it. You're not doing tasks just once. You'll screen tenants multiple times. You're going to handle maintenance requests hundreds of times. You're going to do turnovers again and again. So why not document the process once and make it easier every time after that? Welcome to Your Landlord Resource Podcast. Many moons ago, when I started as a landlord, I was as green as it gets. I may have had my real estate license, but I lacked confidence and the hands-on experience needed when it came to dealing with tenants, leases, maintenance, and bookkeeping. After many failed attempts, fast forward to today, Kevin and I have doubled our doors and created an organized, professionally operated rental property business. Want to go from overwhelmed to confident? If you're an ambitious landlord or maybe one in the making, join us as we provide strategies and teach actionable steps to help you reach your goals and the lifestyle you desire, all while building a streamlined and profitable rental property business. This is Your Landlord Resource Podcast. Hello there, landlords, and welcome to the Your Landlord Resource Podcast. I'm your host, Stacey Casella, and I'm here with my hubby and co-hosts, Kevin Kilroy.
Heidi-ho, landlords.
Now, I think we're working on episode 116 today, and honestly, that's not bad when it comes to podcasts. We're not professionally produced. I create the content, like come up with the subject, do all the research, write an outline, and most of the time, a simple script that we follow. Because we're not those people who can always remember all the details on laws and such. So yeah, we dilly-dally with a script, so the information that you hear is clear and accurate. But that's neither here nor there. I also handle posting the podcast with the show notes and links and all the things. Kevin handles all the recording and the editing and the sound bites, which is a huge task in and of itself. So yeah, I'm pretty proud of us being able to figure out how to do all this on our own. I mean, who would have thunk it, right? Anyway, we're 116 episodes in after 3 years. So we thought, for those of you who might need some guidance on what to listen to first, that we would tell you what episodes are our top 5 all-time listened to episodes by other landlords.
And we wanted to share what resonated most with you guys because honestly, you tell us what matters by what you listen to. And that helps us to know what we should focus on and provide more content on.
Yeah, that's very true. But I will say that we like to share more about what we have already done or what we're experiencing. You know, we can bring you content all day long, but if we have not had to deal with it by actually doing the task or being able to relate to it in any way, I don't know, it just kind of seems like something that anyone could do. I much prefer to report on our experiences and how we handle things to make this content more relatable.
I completely agree. No AI content here, you guys. We are definitely old school.
Well, I will admit, I do use AI for organizing my episode content into an outline. And sometimes it does add points that I have not considered. So it is a very helpful tool in that respect.
Oh, yeah. I mean, I get that. I just meant we're not inputting an idea and asking ChatGPT to do all the work.
No, not in the least. All right, so let's get on with it. You guys, here are the top 5 most listened to episodes from the Your Landlord Resource Podcast. We'll list them off, and then we're going to go back and discuss each one. That way, if you want to jump ahead in the episode to listen about a specific one, you can.
Okay, I'll count them down. Our 5th highest rated episode is episode 58, Hidden Costs of Owning and Operating Rental Properties. You know, nobody wants surprise expenses. Coming in at number 4 was episode 6, creating standard operating procedures for your business. Now, that's an older one, but it keeps getting downloads because SOPs are the backbone of running rentals professionally. And we cannot express this enough. If you want to operate your rentals professionally, you need to start with having standard operating procedures. Now, this next one kind of surprised me. Our third most listened to episode was episode 95, Solving Landlord Problems, a question and answer episode. You really seem to love when we just dive into real questions from real landlords. All right, coming in at number 2 was episode 56, How and When to Transfer Your Rental Property into an LLC. I mean, that's always a hot topic.
Yeah, and one that changes every year. So make sure if you're interested in transferring your income property into an LLC, you consult with your CPA or your real estate lawyer, because in some cases, it's not always the best option.
Yeah, exactly. All right, and drum roll, please. Number 1, our most listened to podcast is episode 99, 5 Oversights That Drain Landlord Profits. You guys love that one. And it actually makes sense because nobody wants to lose money without realizing it, right?
You kind of sounded like Casey Kasem there when you were doing the countdown.
I was thinking the same thing.
All right. So what's interesting to me is the themes that run through those episodes. Protecting profit, staying organized, understanding legal structures, and preparing for the unexpected. Those are the things that separate professional landlords from people just kind of winging it.
And what we love is that your interest helps guide our content. When we see what you're clicking on, what you're listening to, we know what topics we need to dive deeper into or revisit from a different angle. So if you missed any of those top 5, go check them out. You can go to yourlandlordresource.com/episode and then just enter the episode number you want to listen to. Super easy.
We get some really good emails from our listeners, and we do our best to answer all their questions. But those emails are what help guide some of our content. Like one landlord asked about doing improvements to their condo that they had just made into a rental property after they moved out. And we were able to give them some guidance on understanding their market to determine how many improvements to do and then what materials to use. And we answered their questions on setting criteria for the application process as well. Now, we don't usually do this for free, and we certainly didn't spend a lot of time on it, but we gave them enough guidance to figure it out on their own. And we do toss around the idea of coaching. We just don't know if you guys would be interested in it, and if so, what you'd be willing to pay for that help.
Well, I guess we can always just ask, right? If you guys are interested, just do us a favor and email us. Our info is in the show notes. Let us know if you think landlord coaching is something you want to know more about. All right, we are going to reverse things and start with number 1. Let's dive into why episode 99 was your number 1 most listened to episode. Once again, the title was 5 Oversights That Drain Landlord Profits. It clearly hit a nerve because every landlord worries about money leaking out of their business without them even realizing.
Right. And what made this episode so powerful is we weren't just talking about obvious big expenses like replacing a roof or buying a new HVAC system. We were actually talking about the sneaky stuff, the things that slowly drain your profit margins year after year without you even noticing. The very first oversight we covered was not treating your rental property as a business, but more like a hobby. You cannot just wander in and out of rental property ownership. If you have a hobbyist mindset where you're not budgeting properly, you're avoiding tough decisions, or making reactive decisions instead of informed ones, that creates huge problems down the road. There's lost income, bad tenants, damaged property, possible lawsuits, missing out on tax advantages. You guys, all that stuff adds up.
And we work full-time managing our rentals, and we still sometimes ask ourselves, what are we doing all this for? Even with the business mindset, when it gets hard, we want to jump ship. That's why having systems and treating it like a business matters. It keeps you grounded when things get tough.
Yeah, poor record keeping and not having proper paper trail was another item that can slowly drain your profits. You guys, this isn't just about bookkeeping. It's about maintaining communication logs with tenants and staying current on landlord tenant laws and providing lease updates annually, not just when people move out. It's tracking which appliances are in which unit and how old they are and when they were last serviced. I shared a personal story in that episode about how I once paid for appliances on my personal credit card. It was about 2000 bucks. And I completely forgot to reimburse myself from the rental account or expense it off on our taxes. And by the time I realized it, it was not worth the hassle and the cost of amending our tax return. But it got me thinking about what other expenses were we missing?
Yeah. And when Stacy finally sat down with our CPA after fully taking over the LLC, they found so many missed deductions: home office expenses, mileage driving 110 miles each way to Sacramento, large capital improvement projects that should have been depreciated instead of expensed. These are costly mistakes that even landlords who are on top of things can make if they don't have the proper systems for record keeping.
And we also discussed inadequate tenant screening. And if I had to say what the most important task is in your rental property business, it's tenant screening. If you do it well, you only have to do it every couple of years when someone moves out. And we talked about how you absolutely cannot go with your gut. You know, I used to do that and I got burned a couple of times. I felt for the sob stories. I accepted a lawyer as a tenant thinking, well, lawyers are responsible. And that guy ended up being a smoker and a slob, and he created a fruit fly infestation so bad it still traumatizes us.
Yeah, that was next level disgusting. But after a couple of challenging tenants, we completely changed our screening strategy and process. And since then, almost every tenant has been great. They pay on time, they take care of the unit, they communicate about repairs. Proper screening makes all the difference.
The fourth oversight was not using a proper updated lease. Your lease is your protection. And we talked about how landlord tenant laws change, and you can't just year after year or grab a generic one from Google. Our leases are now over 50 pages long because we've learned over the years what needs to be in them to protect us.
Right. And the fifth oversight was not doing regular property inspections. This is where you find unauthorized roommates, overloaded electrical outlets, broken windows, doors that don't lock properly, unauthorized pets. If you don't go into your units at least once or twice a year, you'll never know what's happening.
Yeah, I think this episode resonated so much because every single oversight that we covered is completely preventable. You don't need a huge budget or any special expertise. You just need systems, consistency, and a business mindset. And when you add up all these small leaks in your profit, fixing them can literally add thousands of dollars back into your pocket every single year. Case in point, we just did a shorty episode, I think episode 115, on charging tenants a flat utility fee. This cost is going to offset a $10,000 a year expense for us by 40 or 50%. And I don't know about you, but $4,000 or $5,000 is something I would not mind having back into my bank account.
Yep. And starting in June, we will. Okay, coming in at number 2 is episode 56, How and When to Transfer Your Rental Property into an LLC. This topic never gets old because landlords constantly ask about asset protection and whether they should hold their properties in an LLC.
And here's why this episode is so popular. There's so much conflicting information out there. Some people say you absolutely must have an LLC for every single property. Others say it's unnecessary and expensive. And the truth is, it depends entirely on your specific situation. We broke down the pros and the cons of holding rental property in an LLC versus your personal name. And the biggest advantage is liability protection. Someone sues you over something that happens at your rental property, the LLC structure can help protect your personal assets like your primary residence and your other investments.
But it's not that simple. Setting up an LLC costs money. There's filing fees, annual fees in most states. You need to maintain proper corporate formalities like separate bank accounts and separate tax returns. If you commingle personal and business funds, you can lose that liability protection through what's called piercing the corporate veil. Then there's the mortgage issue. If you transfer a property with an existing mortgage into an LLC, you could technically trigger the due on sale clause. Most lenders don't enforce it if you're still making payments, but it is a risk.
And we talked a lot about timing. What's the right time to transfer? We covered deed types, like warranty deeds versus quitclaim deeds, and transfer taxes, because that's going to vary wildly by state. New York charges 0.4% to 0.65% depending on your property value. And Florida has documentary stamp taxes. These percentages add up fast on rental properties.
One thing we emphasized heavily was the importance of professional advice. You need both a real estate attorney and a CPA before making this decision. State laws vary, tax implications vary, your personal situation matters. For example, if you're planning to sell soon, transferring to an LLC could complicate capital gains taxes. If you're refinancing, having it in an LLC might affect your loan options. We shared Stacy's experience buying out her family members from the LLC. Property taxes went up significantly because the ownership transfer exceeded 50%.
Yeah, nearly 2 full months of gross rent now goes just to property taxes on that one rental. And it's brutal. But we knew that going in because we worked with our CPA to understand the consequences. And I think this episode was so popular because it gave landlords a framework for thinking through the decision making and not just a blanket do this or don't do this answer. We presented the questions that you need to ask yourself, like how many properties do you own? What's your risk tolerance? What's your budget for legal and administrative costs? Are you planning to expand? And we made it clear there is no one-size-fits-all answer. A landlord with one single-family home might make a totally different choice than someone with 10 units. The laws in California are completely different from the laws in Texas and in Florida.
Absolutely right. All right, let's keep going. Episode 95, our question and answer episode, came in at number 3. And honestly, I'm not surprised because these Q&A episodes are some of our favorites to record too, because we're not just talking about theory. We're answering real questions from real landlords dealing with actual problems in real time. That makes it so much more relatable and actionable.
Yeah, and in that episode, we covered a huge range of topics. We addressed some criticism that we had received about episode 46 on advanced tax strategies, because someone left a review saying that we gave quote unquote potential misinformation about LLCs and tax advantages. So we took the time to clarify our disclaimer that our situation with over $5 million in assets requires different protection than someone with a $300,000 duplex. And we reminded everyone that our advice is informational. You need to consult your own professionals. We also corrected ourselves on Tenant Alert's lease guarantee pricing. A listener emailed us pointing out that our numbers were off. And you know what? We owned that mistake completely. The pricing that we quoted was only available immediately after running a background check that came in spotless, not on their regular published rates.
And I think listeners really appreciated that transparency. Come on, we're not perfect. We make mistakes. But when someone calls us out on it, we address it directly and we clarify.
Yeah, we also answered kind of a heartbreaking question from a listener who inherited a 1978 manufactured home that was falling apart. Had a leaking roof, a failing septic tank, it had soft floors. It also had an elderly tenant who loved living there and she didn't want to move. So we gave her 3 options to consider. It was a tough situation with no perfect answer, but we tried to give practical guidance balanced with compassion.
We answered questions about pest control responsibility and gave advice to someone buying their first rental.
The funny thing about that episode was that it was our son who was buying his first rental. And we're very proud that he did buy a duplex about a year ago. He put quite a bit of money into the property, but in 2025, there was an option for a 100% bonus depreciation to be taken on taxes for businesses. And I believe he was going to use that option to recoup most of the improvement money so he can at least save for or buy his next rental property. So, you guys, you might listen to an episode we did 2 years ago and find that tax laws have changed or laws in general, giving you an opportunity that was not available when that episode first was published. So please, please, please work with a lawyer and a CPA to help guide you on your rental property business.
Yeah, we're here to give insight and information so you can create your own business strategy that works for you and your goals. Along those same lines, we will recommend software that has worked for us or for our family members with rental properties, like TurboTenant, because it's perfect for new investors. Free advertising across dozens of rental sites, free tenant applications and screening, free rent collection via ACH, and for a small monthly fee, unlimited personalized state-specific leases. For a new landlord, that's a huge value.
Yeah, and we had a couple other questions we answered on episode 95, so go check it out. Again, you can listen to any of our episodes by going to yourlandlordresource.com/episode and then just put in the number. So for this one, it can be found at yourlandlordresource.com/episode 95.
I think what made this episode so valuable is that it showed landlords they're not alone. When you're managing properties, especially self-managing, it can feel a bit isolating. You run into problems and you don't know if you're handling them right. These Q&A episodes create community. They show that other landlords face the same challenges and there are practical solutions.
And we always encourage our listeners to send us questions because we know there are hundreds of other landlords wondering the same exact thing and they're not asking. Just last week, I answered questions about ESAs and how to handle a corporate lease offer for workers to stay in a rental. So send those questions our way. If we have the knowledge and can answer them quickly, we will.
Number 4 on the list is episode 6, creating standard operating procedures for your business. Now, even though this is one of our older episodes, it continues to get downloads month after month because the topic is absolutely foundational to running rentals like a real business.
Yeah, you guys, we can't stress this enough. If you want to operate your rentals professionally and not feel like you're constantly putting out fires and reinventing the wheel every time something happens, you need standard operating procedures, also known as SOPs. We opened that episode talking about how small businesses can learn from big businesses like McDonald's and Taco Bell. Those franchises succeed because they have systems for everything. Every employee knows exactly what to do because there are documented procedures.
We cited Michael Gerber's book, The E-Myth Revisited, and his 3 foundations: innovation, quantification, and orchestration. Innovation is finding better ways to do things. Quantification is measuring whether your innovations work financially. Orchestration is creating consistent, repeatable systems.
Yeah, that's a really good book. We'll link it in the show notes for you. You guys should check it out. I shared the example of a landlord friend who changed their late fee structure from a flat $25 to $10 per day starting on day 4. That's innovation. Then you measure whether tenants started paying on time more often. That's quantification. Then you document that process in your lease so it happens consistently. That's orchestration. We gave so many reasons why SOPs matter. As you scale and add properties, you can't manage everything yourself forever. Do you really want to be fixing the toilet handles for the rest of your life? By systematizing early, you position yourself to delegate later so you can spend time on things that bring you joy.
We talked about taking time off, whether for a vacation or for unforeseen illness or family matter. We are able to hand operations over to our team. Each person knows their responsibilities and how to handle scenarios that arise because we have documented procedures.
Yep. If something happens to you, having SOPs means that your spouse or your children or your business partner can step in without missing a beat. It's like having a will for your business operations. And we mentioned legal disputes and fair housing disputes. If you can show a judge that you have written procedures and you follow them carefully, that goes a really long way towards showing that you've done nothing wrong.
Then we got into the actual content of an operations manual. We discussed how we handle things from marketing and advertising procedures, vetting tenants, and then moving them in, to inspections, maintenance, renewals, move out, and turnover procedures. We also went over office procedures, like where mail goes, where files are kept, access codes, where keys are stored, banking information, reserve accounting, bookkeeping, software. I mean, everything.
I think the reason this episode continues to resonate is because it addresses a pain point that every landlord feels, that sense of being overwhelmed and disorganized. Standard operating procedures are the antidote. They bring order to chaos. They help you feel in control instead of reactive. Even if you only own one property, creating standard operating procedures is worth it. You're not doing tasks just once. You'll screen tenants multiple times. You're going to handle maintenance requests hundreds of times. You're going to do turnovers again and again. So why not document the process once and make it easier every time after that?
I was honestly surprised that episode was not our number one. I mean, it's packed with a lot of really good information and guidance. All right, that brings us to our last one. And rounding out the top five is episode 58, Hidden Costs of Owning and Operating Rental Properties. This one resonates because every landlord has been blindsided by an expense they didn't see coming, and nobody wants surprise expenses. When you're budgeting for a rental property purchase or trying to figure out if your property is actually profitable, you need to know all the costs, not just the mortgage and property taxes.
Yeah, well, we started with the property taxes and how they can increase dramatically depending on your situation. Kevin mentioned how when I bought out the LLC for my family, property taxes went up nearly 50%, $7,000 to $10,000 more per year that we hadn't accounted for. We also covered city government assessments, street repairs, school bonds, things like that. Because for one property that we sold, assessments were over $700 annually. That's $60 a month, which for new landlords, that could be half your cash flow.
We even talked about homestead exemptions like California's Prop 13 and other hidden costs like rental property permits and inspection fees that cities charge, HOA fees, and special assessments or others. Maintenance and repair costs that have skyrocketed. I mean, we're paying $150 to $200 per hour in the Bay Area now. It's about $100 in Idaho.
Yeah, that's a pretty high hourly rate. And insurance costs have climbed dramatically. I mean, you guys all know that. We covered purchasing costs as well, inspection fees, transfer fees, closing costs, and legal fees for everything from evictions to LLC transfers to just lease advice. I got really personal talking about unexpected property damage. We've dealt with 2 floods, a leaking washing machine that was never reported and caused mold behind the walls, a tree branch that pierced the roof during a storm, termites, not once, but twice in the same property. And in 1 year alone, we spent over $15,000 on unexpected issues on 2 properties. We also covered vacancy and turnover costs, painting, carpet cleaning or replacement, appliance upgrades, cleaning. And we emphasize that cleanliness really does matter, because when prospects walk through the door and they see how clean everything is, it shows that you care and it makes them want to live there.
We talked about paying for marketing costs like Zillow premium listings at $30 a month and welcome gifts for new tenants. All these little expenses add up to hundreds or thousands per turnover.
Yeah, and preventative maintenance costs can be a big expense as well. And then we also covered property management fees for landlords who want to hand it off. Initial setup fees can be up to $500. Tenant placement fees can be 50 to 100% of 1 month's rent. There's vacancy fees, eviction fees, early termination fees. These can make property management companies way more expensive than a landlord would expect.
The key takeaway from that episode was know your numbers before you buy. Run a detailed rental property calculator that includes every possible expense. Only after accounting for everything can you determine if the property will actually cash flow positively.
And being realistic about costs is what separates successful landlords from people who get overwhelmed and sell at a loss. We're not trying to be negative or discouraging. We're trying to help people be prepared so they can plan accordingly and make informed decisions. This is why we walked away from a 7-plex in Boise last year. We know that we want to manage and maintain our units a certain way, and that building needed a lot of work. And when we penciled it out, the numbers were not in our favor, so we backed out of the deal.
It was in a great location too. That was a hard one to let go, but it was the right decision for us. So looking at these 5 episodes together, what's the common thread? What made them resonate so much with landlords?
I think it's that they all address fundamental challenges that every landlord faces: protecting your profit, protecting your asset, solving real problems, building systems, understanding true costs. These aren't niche topics. They're universal and they're practical. And we're not just talking theory or big picture strategy. We're giving very specific, actionable steps that you can take to improve how you run your rental property business.
These episodes work for landlords at any stage too. Brand new investors trying to figure out the basics, and experienced landlords wanting to professionalize their operations. Both audiences find value in all of these.
Yeah, well, that's the hope, isn't it? All right, you guys, that's our episode for today. If you enjoyed this episode, would you do us a favor and leave a very kind review of the podcast? Because reviews help others find out that we're the real deal. And if you want to hear more, follow or subscribe to the podcast so that each week the episodes are downloaded right to your favorite podcast platform. We have newsletters and free guides and a private Facebook landlord page. And if you want to learn more, just check out the show notes for this or any episode. Thanks again for sharing your time with us. We really appreciate it. And until next time, you've got this, landlords.